Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
Where are the flows? And it's very much been retail getting back into it and institutions not so much getting back into it. You look at consolidated equity positioning. So that's just consolidated, just means kind of everything, right? Your systematic, your option, it's everything put into one. And we've definitely had a nice bounce back from those lows in April, but still there's really very few charts out there that I'm looking at that give me that feeling that we're overheated. This is nowhere near as bullish as it could be. The Goldman Sachs US equity sentiment indicator, and tell me if you don't believe in some of these, Samantha, but it's not even moving. I don't even know what it's doing, but it's not even going up at all.
They lack the conviction until they have clarity. But we all should be thinking the same way. The same playbook, and I just wrote about the Yellen playbook of juicing the markets with liquidity by Treasury, Fed coordinated rate cuts or pause. Right now, there's no incentive for Powell to play game with Bessent, would play in the sandbox, the same game. And there's too much tariff overhang. So there's no reason for these big money, not the 3 to 5 billion that might come in for retail because they're FOMO, but the institutions that suffer from FOMO, right? Fear of materially underperforming, that hasn't even triggered yet. So I think if we were to get a relief, now remember, Qs don't usually fall before July. So June is not typically a volatile month. The reason why I said, and I keep saying, I think macro event risk comes in more toward July is because I think we need to get out of that sweet spot of FOMC, where they're not going to do anything. Bank of Japan, probably not going to do anything. End of quarter, not just June monthly expiration, but end of quarter, where then we can have a better timing, I think, for volatility to rise and for a little bit more shake and bake this summer. There's too much uncertainty around tariffs. Anyway, I can talk to the macro side of it, but what are you looking at right now? You're looking at positioning.
Well, you mentioned money supply. So here's M2 money supply. So as long as we're not cutting, what did Doge do, and what are they trying to do with the budget? That has its downside, obviously, and yields are telling us that. At the same time, I think the market can handle for 4.5, 4.7, 4.8. You start getting it a little bit higher, then we start to worry about plumbing. So I think it's almost the market wants to go up. It's going to flinch negatively if we do get plumbing issues or those kinds of problems. But you've got this sort of money supply, you've got more.
Let me show you before you go on to the next one, because you're talking money supply. This is my version and my interpretation. This mantra that I know is popular is not mine. I am not consensus on this. Surprise. Anyway, this money market funds, total financial assets, does not mean it's money on the sidelines ready to come in. No and no. But this is my write-up. This is not cash on the sidelines ready to buy stocks. They already have. So it's liquidity in general as the market and the economy grows over time. So the only other thing I want to say about this is not money that goes into the stock market. Again, they already have. This is really also an outlier that can revert with velocity. And we haven't seen that. We haven't had a macro trigger to interrupt the bullish economic and market flows. So that we did here, right? We did back here in 2000, and we did again the great financial crisis. And then we've had massive fiscal spending, stimulus, monetary easing, and so on and so forth, not just US, globally. But this is money market funds is not about money coming into the market, and everybody thinks that's bullish. It already has. That's all I want to say. That is my soapbox, and I'm standing on it.
They think it's money. They think it's 7 trillion waiting to come in the market. Now, I don't know about that either. Yeah. I mean, I don't know. Maybe there's some of that, but I suspect that as the population sort of ages, I know there are people out there going, wow, I can actually make a bit of money in my GICs or my, whatever, the higher interest savings accounts, things like that. I'm saying GICs. You guys are like, what the heck is that? So what is the term deposit? You can make some money with money sitting there. So
yeah, and that's what has helped, by the way, this inflationary asset that is the market. My goodness, the house too. Money is making money right now. Even Exxon, tons of money interest that they earn on their cash, which is why we've had this, again, robust backdrop. But that's not a reason for what we're talking about with policy intervention coming in to backstop the market on April 9th, and then follow through intervention by Bessent 30%. And then even Bank of Japan, actually the MOF said, okay, we did a survey. Maybe we need to tweak the composition of the longer duration 30, 40-year bond. And by the way, this is what it looks like, which is very important because I don't think people are so focused on this real quick. This is the kind of stuff that's intervention. And this is what backstops the equity market in a New York minute. So this is the trend is obviously up and to the right. This is the 30-year Japanese government bond. And then Sunday night, they announced, hey, guess what? We did a survey. Maybe we should tweak the composition. And immediately, US and Japanese yields dumped. And what happened? Equities got supported. So there's lots of ways to intervene verbally and then mechanically, price insensitive buyers and sellers. And then we also have the promise of more easing, like with Treasury Secretary Bessent last week coming in and saying, yes, I can see a situation where this summer we're gonna release some of the requirements for SLR for banks, and then in Q3 we're really going to get going with the deregulation, and then we're really likely going to issue more short duration liquidity infusing T-bills to fund this ever exploding deficit versus longer duration liquidity sucking notes and bonds. We have all this policy intervention that is spoken, and then we've got Trump. Who's not going to want to be called a taco.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.